Hello, everyone, and thanks so much for joining us on another webinar about KingsCrowd Capital. Hopefully you've been enjoying learning about KingsCrowd Capital through our webinar series. And today we have a really exciting webinar because we're actually going to be diving into the people behind what we do at KingsCrowd Capital and KingsCrowd Our Business. These are the bright minds that are actually powering our data and rating algorithm, enabling us to perform at a really high level, especially when it comes to fund performance over the next, 8 to 10 years. So today we're going to dive into who those folks are. As you can see here, we have 5 of us total, including myself. We have Ahmed, our CIO. We have Z, who's on our investment research team. We have Olivia, who's on our investment research team. And we have Carolyn, who's on our data team. And you're going to get to meet all of them today and learn more about their backgrounds and what they do here to power our processes. But to kick it off, I'd love to dive in a little bit more and learn more about one of our GPs, Ahmed, and about his investment experience in the past. As many of you probably already know from watching past episodes, Ahmed does have a background in being a venture capitalist, so I'm really excited to tell you more about his background and dive into it a bit. So Ahmed, thanks so much for being here.
Thanks for having me.
So today I think it'd be really relevant to dive into specifically your experience in working as a venture capitalist and some of the companies that you've invested in that have done really well, so people can understand a little bit more about kind of your investment thesis and some of your track record. But maybe the best place to start is tell us a little bit about the firms that you worked at, and then I'd love to hear a little bit more about what your typical investment thesis is before you're investing in a company.
That's great. Let me start by when I joined venture capital, or joined the industry of venture capital for the first time. I joined a holding company, an internet holding company, and at that time we wanted to create, the first internet IPO in the Middle East. That was back in 2009, 2010, and we created an online payment company. We created an online advertising company, and we had multiple forums, which is the equivalent of social media right now. But yeah, it was a big operation. We wanted to do so many things, and that was my first introduction to venture. And in that holding company, we also created an accelerator, and we created a venture fund for seed stage companies. So that I worked there for 3 years. During that time, I applied, or I actually went to attend the Harvard executive training on venture capital and private equity, where I learned a lot about how this operates. And they had this little software that you simulate investment. So you learn more about how to create an investment thesis and select companies, invest in them, and by the end of the week, you see how did you do. It's like simulating a fund term of like 10 years in 1 week. So anyway, after that, I was accepted at the Kaufman Fellows Program, which is a 2-year part-time educational program for venture capital in Palo Alto, California. After that, I joined 2 other VC firms, Leap Ventures and Arzan Ventures. Both of them invested in the Middle East and across the world. We invested in companies in Europe, companies in Canada, and in the States. After that, I wanted to take a detour and learn more about data science and become more of a data-driven investor and get more operational experience. And my focus was fintech. That's more of my passion: fintechs, DeFi, Web3. So at that time, I learned data science online. I have a technical background, engineering background. So I decided to learn data science on Udacity. I took 2 nano degrees on data science and machine learning. And then I joined one of the biggest fintech companies in the Bay Area, or maybe now in the States, Carta. I joined Carta for 3 years, working on data on investments and funds. It was so much fun. And then I joined the second fintech company in my career, which is KingsCrowd. So that's more about my background. So I bring both experiences, data science and venture, and that's what allowed me to create algorithms to evaluate companies or startup investment opportunities, especially in the online private market, because there's an abundance of data in there. So back to your question on my biggest investments, I think the biggest was Careem, which was acquired by Uber for $3.1 billion. Another one is Instabug, which is funny. Instabug, when we invested in Instabug, it was a very seed stage, very early stage company. And then after we invested in that, they got into YC. And then from YC, they got much bigger. Now, I think the valuation is about $400 or $500 million. So those are two, of the biggest investments I had. Of course, there are multiple others. Some did not make it, some are still there. Back to the other question you asked, the investment thesis. It's basically, I like to first be proactive in my investments. I like to look at the markets, see what trends are there, and then try to find companies that are following that futuristic trend. Who are those companies that are trying to disrupt big markets? So I start from the idea or the things that I'm looking for, and then try to find the companies. Of course, sometimes you will be reactive, seeing a company that's you never heard about before and disrupting a market that you never analyzed before. But usually, it's being proactive and finding those trends in the market by analyzing startups, because these are the trendsetters.
Thanks, Ahmed. No, that was super helpful. And so, to kind of sum it all up, we have someone with a data science and venture capital background who's invested in some really successful companies. And there's a lot to be said for that as we're going about this process of launching KingsCrowd Capital. So really happy to be able to work with you, Ahmed. Happy to give you a little bit of a quick background on myself and kind of my experience. Basically, I started my career in private equity consulting. I worked for a firm where we worked on behalf of every major private equity shop you could think of. And during that time, did about 30 or 32 due diligences, basically on behalf of private equity shops before they acquired a company. And that's really where I kind of learned about all of the metrics you need to care about when looking at a business. Got to dig in on tons and tons of companies, and frankly, got fed up with not being able to invest in them because I started to see all of the signs of what leads to a successful company and wished I could be a part of that, which is why I started KingsCrowd. But to kind of back up and talk about my experience a little bit in investing. So I would say generally my thesis has really been looking at major trends, kind of like Ahmed. The two key areas for me have been healthcare and financial services. I come with the financial services background. My wife comes with the healthcare background, and anything that's democratizing access to financial services or healthcare from my perspective is one of the biggest opportunities over the next decade. So for me, those are real focus areas I care a lot about. And then if I go like one level further out at a fundamental level, I like to look for capital efficient founders. And I like to look for founders that are really gritty and have found a way to make a lot happen with very little. That to me spells success over the long term. So those are some of the things I look for. In terms of a few winners that I have in my portfolio right now, most of them are still paper gains because I only started investing about 5 years ago. But I can say that Alto IRA, from when I invested, has about a 9.6x from when I invested, which is one of the first alternative IRAs out there. NowRx has about a 4x, which is from when I invested. And that's a really interesting company in kind of the pharmaceutical delivery space and automating pharmaceutical delivery. Really, really cool company. And then Ground Floor, which I'm sure many of you know, one of the biggest real estate investment platforms, from when I invested is up about a 9x. So all kind of fast growing, up and coming companies that are doing really, really well across that healthcare and fintech sector that I was talking about. So anyway, that's my background. Really excited for the journey ahead and for the investments we're going to be making. Now I want to kick it off to Z. Z, thank you so much for joining us here today. Let's talk a little bit about your background, and then let's talk about some fun metrics.
Yes, sir. Z Zong, Director of Investment at KingsCrowd. Prior to KingsCrowd, I served in the U.S. Army. So at U.S. Army, I was doing financial management for 25th Infantry Division. And post-military, I went to business school because I wanted to transition to the civilian life. So I went to UC Berkeley and got my MBA and worked at investment banking and several VC funds. The VC funds are VU Venture Partners as well as Skill Asia Ventures. At VU Venture Partners, we pretty much, it's a multi-stage fund and it's industry agnostics. We sort of due diligence with the founders, research a lot of quality deals, and then also actually participating in the voting stage and being the investment committee. So I learned a lot from that fund. And at Scale Asia Ventures, this is when I look into different market in Asia, especially in developing economies, or emerging markets. So that really gave me a broader perspective on we need to have not only a diverse group of people, or also a diverse group of portfolios. So those two funds I learned a lot, and then I joined KingsCrowd. And my role at KingsCrowd is to work on backend product as well as the algorithm, and also research quality deals for KC Capital, and as well as connect with founders. So during my time at KingsCrowd for over a year and a half now, I've vetted over 800 companies and conducted diligence calls with over 250 founders, and also published over 70 founder profile articles. And in my portfolio, some of my notable ones are Varda, which is the space manufacturing industry. They're getting close to over $1 billion valuation now, and as well as Laura DiCarlo. That's also part of my investment that I made while I was a VU. And that company is actually raising. It was raising on online private market, so that was interesting to see there's a transition between VC to online private markets. So yeah, and that's pretty much my background.
Awesome, thank you, Z. Well, since you're kind of one of the resident experts on our team around venture capital and fund metrics, let's talk about how you know if a fund is good or not. What are the metrics that we need to utilize to understand if a fund is performing well?
Yeah, absolutely. So there are two parts to fund metrics. The first part is what is your rate of return, right? Because we take into time consideration and what is your return within the fund cycle. The rate of return, there's gross IRR and there's net IRR. Gross IRR is we don't take into account of the fees and the fund expenses, whereas net IRR is after you taking out all the fund expenses, what is your actual after you take out the costs, that is the net. And the second part of fund metrics is your multiples. And multiples, we have DPI, which is distributed paid-in capital, and RVPI, which is residual value to paid-in capital. And lastly, we have total value to paid-in capital. So what do they mean? DPI, distributed to paid-in capital. In layman's term is how much you put in and then how much you give out to the investors, to your LPs. That's distributed. So that return is called DPI. And after you distribute it to investors, and there's some that's residual value. So what has left in your fund, that's residual value to paid-in capital. And lastly, total value to paid-in capital is in total how much you put in and how much you get out. And that's the TVPI. So those three metrics they don't take into account the time, and those are just the multiples. And so that's the two parts of the metrics.
Got it. So Z is going to be helping us a lot with making sure that as we invest into the fund, we're actually tracking how we're performing over time, making sure we're looking at all of the key metrics so that we can continue to communicate with our investors how we're performing over time. Thank you for that, Z. So now one other thing that I want to make sure we really define for folks is that there are two components in the KingsCrowd universe. There is KingsCrowd Capital, which is where the fund is hosted. And then there is KingsCrowd Inc., which is our core business. It's a business that many of you subscribe to. It's where you get all of our ratings, our analytics, and our analyst reports. So all of the KingsCrowd Inc. business is basically ran by our investment research team. They're the ones conducting the research, collecting the data, doing all of the processes in order to provide you with the end product, which is those ratings and analyst reports. Now, what we're doing at KingsCrowd Capital is we are then taking all of that data, all of those ratings, ingesting it into the KingsCrowd Capital system, and then making final decisions as an investment, venture capital vehicle. So there are two separate pieces of the equation. You have Ahmed and Z, who are working on the capital team, and then you have Carolyn and Olivia, who are working on the investment research team. These are separate teams. The investment research team is essentially the input to KingsCrowd Capital, which provides the output, which is the fund. Hopefully that makes a lot of sense. It's really simple, but all you really need to know is that essentially nearly all of our due diligence is conducted by KingsCrowd Inc. And then we utilize that due diligence to get to a very, very small universe of opportunities worth taking time to look at to make final investment decisions at KingsCrowd Capital and then invest into the fund.
Yeah, would like to add something here. So Carolyn and Olivia are only two of a bigger team. So we have the investment research team. I think now it's 10 people. That includes people who collect data, people who research data, and then people who write reports and investment memos on some companies. So in addition to that team, we of course have the technical team who built the automation process that we created in KingsCrowd. And that is deal sourcing is automated, deal evaluation is the initial deal evaluation and screening is also automated through the algorithms we created and the scoring or the ratings that we have on KingsCrowd Inc. So you see there's maybe 70% of the work is done by the machine, and then 30% of the work is done by a layer of a human layer that we add on top of the work of the machines. So there's a huge effort that's done behind the scenes, and then we utilize all of that from KingsCrowd Inc. to run KingsCrowd Capital efficiently and reduce the cost and the expenses at KingsCrowd Capital, which is not usually, it's not your typical venture capital firm, because we're utilizing a big team that's already working on another task, and we're taking all of the results of their hard work to use at KingsCrowd Capital.
So even though there's divisions within that 30% in terms of people who collect, people who then analyze the data, and then people who write, we all at some point have done each of those tasks. So I think it helps to ensure that there's, you know, more continuity, and we're all kind of on the same page about the type of research we're collecting, how we analyze it, and then how we write about those companies.
That's spot on, Carolyn, which is actually a wonderful jumping off point. Would love if you give a little intro on yourself, Carolyn, and then hop into what our data collection process looks like today.
Absolutely. And thanks so much for having me. It's always kind of a nice refresh to like sit around and chat with people you work with and be reminded of all the beautiful things they're doing and past experiences they've had. Yes, Carolyn, and I'm a part of the data team. I'm a recent Wellesley College grad and actually came to KingsCrowd through Olivia, who also attended Wellesley College. I studied economics and political science, and I've always been interested in kind of the entrepreneurship space and venture capital and what it means to take capital and to grow something from that. So in some ways, KingsCrowd was a very natural stepping stone, and feel so thankful to be a part of the family. I work really closely with another data analyst named Yasmin, and we do a huge bulk of the data with a lot of Z's help as well. So we'll look at whether it's companies raising debt or on venture funds, different platforms, and now more alternative assets as well, like crypto and even different real estate deals. So we've had a lot of diverse experiences, and I want to say, I think independently, we'll go through about 20 companies each per week with the help of others as well. And so that ends up being somewhere between 20 to almost 50 companies a week or different vehicles raising. And we look at different things from founder information, where they've gone to school, their background, to how much they're raising, the types of metrics that they've made throughout, whether maybe this is their first round or their third, to I guess if other companies have been involved or if they've been in accelerator programs, kind of anything under the sun that's relevant for an investor to determine whether or not it's something that they'd be interested in investing in, the type of space that they're involved with and where they're heading. Yeah.
And Carolyn, just for folks who don't know the process as well, we start looking at these companies as soon as they file a Form C, a Form 1A, and have an offering page live for investment. Is that correct?
Correct. And so just depending on when the company has decided to file those, they could be very early stage, just one founder and, you know, no money in the bank, or very far along. And so it's exciting for us to see different trends and progress, as well as to keep track of companies that have, you know, raised now 3 times. And let's say you've done the data for that company each round, you start to see some of the progress and where they're heading. Yeah.
No, that's awesome. And you know, but like Carolyn was hitting on, a lot of things we're looking at is things from market size, terms of the deal, the business model, the founder's experience, the performance of the business. It's interesting. You know, one of the other things that we spend a lot of time looking at is how do we find ways to define non-quantitative pieces of data? And it could even be something such as, a margin level of a business, right? What is the gross margin going to look like over time? The reality is in a pre-revenue startup, you can't say what their margin level is because they have no financials. So how do we do that? We do a lot of bucketing exercises as well. Can you talk about a couple of the categories where we create buckets and what that kind of looks like?
Yeah, I think that's a great question and a really helpful point too, because at some point there's so much data and so much information oftentimes on a company or just a specific raise that it's challenging to piece it out and say, okay, what should we really be looking at and be, cautious of when it comes to investing. I think a big exercise in bucketing is related to markets, particularly for emerging technologies or something that's disruptive where there hasn't been enough progress or the market is so small, it's difficult to say where things are heading. And if we think this technology is disruptive or if there are many competitors. So in that instance, I think first trying to take a step back and say, okay, what's the geographic location that this company or technology is targeting? And then from there, assessing the type of growth that we would expect. So this comes through just very basic research in terms of market sizes, trying to see if there's something that's equivalent in terms of a competitor that we could use as a possible market size. And then determining whether or not we think that market has a lot of potential. And that comes up to like very macroeconomic factors oftentimes when we think about, you had mentioned democratizing healthcare, like, do we think moving forward, healthcare would become something that should be more accessible, or do we think people are going to have less of a need for healthcare? Probably something that over time people will want more access to and improved options. So in that sense, definitely a very promising industry to explore. So I think that's an aspect of true bucketing. And then in addition to that, I would say anything related to past rounds raised, it's really helpful in general, as an investor to say, okay, so this company has a little more experience. They've raised around in the past. What did they do with that capital? And this is where like gritty founders, as you mentioned earlier, are so exciting. And we see like, so the company raised, $500K, for example. How much growth have they had in terms of their product, in terms of their team? Do we see them moving forward at a pace that's exciting or something that, causes more pause before we start to invest in that company? And so this is a simple bucketing. It's very subjective in some ways to say that the product has had good growth, if we're being honest, or to say that the team has had lots of progress, or that the market is continuing to expand. So it comes down just to our own understanding of the space and some of the conversations we have with other team members who maybe have more experience in certain industries to do more of that bucketing.
Thanks, Carolyn. And one of the other things I'll just say as a byproduct of what we're doing is we're ending up with this really, really interesting database. I can tell you in my consulting job, every time we went to look at a company, we had to do a market sizing effort about that company. And it could take days at times and buying very expensive inputs and all these things. And one of the cool things we built at KingsCrowd is literally for every one of these companies, we don't take the market size that the founder presents because they're always going to paint the rosiest picture. We go off and we do our own research and we find our own market sizes for whatever market they may be in and our own resources for that. And we're actually right now collecting where that resource came from, the actual size, some commentary on the market. And now this is standardized and collected for, 4,000 or 5,000 companies. I can tell you like that alone is such a valuable asset in the private equity and venture capital industry. People would die for that database alone, just having that information. Not including all of the other things that we're collecting around these businesses and the way that we're creating structures around every element of the business to create some sort of sense of normalcy and structure so that we can make data-driven investment decisions. So I think it's really, really cool.
Yeah, and Chris, I think you mentioned that we don't take the target or the market sizes at face value because, founders are excited, they want to make it bigger. But we also don't take, and maybe Olivia can talk more about this, we don't take the number of competitors or the competitors that they mention at face value. We dig deeper into this company's business and we try to find the actual true competitors for them, even the ones that the founders did not know about. Maybe Olivia can talk more about this when she talks about the investment research process.
Yeah, sorry, before, I just want to add something more on the data collection. This is not just mere data collection. So for each raise, we have close to 400 attributes for our ratings, which is incredible stuff. And Carolyn and Olivia, they go in and research, and for each company, they collect over 100 of those attributes, right? The other 300 is automated, but over 100 attributes. That is not small feat. It's not just data collection. You have to actually go in and dig deeper into their offering circular, SEC filing, right? check founders LinkedIn, and Olivia and the research team will go in and talk to the founders. I think this is a good segue to do. I don't want to jump the gun here,
Set me up
but
really well.
I just wanted to reiterate that we have came a long way from just having a small group attribute to now our 4th and 5th iteration of our product. So and to have you know, Carolyn or Olivia and the rest of the data and research team to really maintain that data integrity to have a profound rating. This is incredible stuff. Go ahead, Olivia. Sorry.
That's perfect. Yes, Olivia, please give us a little background on yourself and then let's hop in.
Yeah, absolutely. Thank you so much for having me. My name is Olivia Strobel. I have been with KingsCrowd for about 3.5 years now, which feels crazy to say out loud. I've spent the majority of my career with the KingsCrowd team, but prior to KingsCrowd, I was with Glasswing Ventures, which is an early stage VC based in Boston that looks into AI technologies. And I had a great time there. And as Carolyn mentioned, also studied at Wellesley College. I have a background in neuroscience. That was my degree. And so I have a strong interest, kind of similar to Chris, in the healthcare tech space. I have NowRx in my portfolio as well. I also have Elemento Health and Quadrant Biosciences, actually, which is a bit of a later stage company for our typical equity crowdfunding portfolio.
Awesome. So let's hop in. Now we have the data, we know what the deals are, and now they get handed off to kind of the investment research team or the investment analyst to start diving in further and learning more about the business. What are some of the processes and due diligence items we go through when looking at these companies once we have the data on them?
For sure. Yeah. So I think of it as if the data team is like baking us a cake and we're putting the frosting and sprinkles on it. So
I love that.
Adding to that empirical evidence that they've presented us, and they do a fantastic job with it. So one thing we like to do is always call the founders. The first question I ask myself when evaluating any company, and I've had the privilege of evaluating and I've diligenced several hundred companies in my career with KingsCrowd. I'm always asking, is the company and founder solving a problem, or are they creating a problem and then solving it? And that's something that you can't always see in the data. It's not a question that you can quantitatively answer. So I get on the phone with the founders. I ask them all about what they're doing differently, who they consider their competitors. I ask them about their market size and their plans for growth, and where they see the company going. And I try to get that additional background that might not always come through in the data. And believe it or not, I think we're very far from a place where machines are doing all of our investment for us. And I think in that sense, it's super helpful to get on the phone with the founders. And then I also sometimes will even go so far as, especially if it's a CPG product, ordering it myself. I had a company a few weeks ago where they were creating a new yerba mate drink. So I actually ordered some off Amazon and tried it myself. So I'd say that's one of the best ways to evaluate a company is to be a customer. I don't typically have the ability to do that, but when I do, I try to, be an end user of the product. So we go that extra mile. We talk to the founders. We get to know their story. We get to know the background of the company. We may try the product, and then we go in and look at the competitors in depth. That's another really big thing that's difficult to gather in the data. So obviously a founder wants to present themselves as best as possible. They might, in certain cases, be leaving out some competitors. They might have not thoroughly researched their market. And then, like Carolyn said, we go into those macro trends that may not be super widely available in the data. So, for example, right now, the no-code space is trending quite a bit, and that's something that is hard to capture in data. So if we see a no-code company come along, yeah, they might have a high compound annual growth rate, which will show up in the data, but what does that mean, qualitatively?
I think it's important to really clarify there too, that each company is evaluated kind of, yes, within the ecosystem, but within the sphere of the other companies. For example, in the CPG space, that those companies we're assessing according to other CPGs in comparison to something that's more pharma or something more like hard tech. And so determining and figuring out where traction is being made is so important to be specific about the space that that company is in, because pharma in comparison to CPG does not, it's apples and oranges. Like, we have to be so clear about what we're looking at, the type of competitors in that space, and what traction looks like for that industry in comparison to just broadly.
Absolutely. That's a great point. Which actually I think leads perfectly into our last segment, which is, okay, we've now done all of the work. We've collected the data and sourced the deals in an automated way with human intelligence. We've now done further investment research to further kind of solidify and understand more about these companies with the investment analyst team. And now we take all of that, and with specified criteria to start, we bring it over into the KingsCrowd Capital universe, where Ahmed, Z, and myself will make final decisions before investing into these companies. So Ahmed, can you talk a little bit about what the process looks like? I guess, what are our key criteria that we look for consideration of investment? And then what are the last steps that we take prior to making an investment into the fund?
Just a reminder, this fund is a generalist fund. So we're industry agnostic. Although every one of us talked about their own investment thesis and their own passion in some industries like fintech, and some others, and pharma. But for this fund, fund number one, hopefully we will have other funds in the future that focus on specific industries or on specific themes. But for this fund, it's industry agnostic. So this means we do not want to be heavily invested in one industry versus all others. So that's the first criteria. The second criteria, which is, of course, because we're a data-driven fund, every company that we invest in has or must score 4 and above in the rating system on KingsCrowd Inc. And after that, we look at these companies. There are some few other criteria that we look at. So the main two are these, but then every company we invest in, we should expect at least a 10x return in the future. Every company we invest in should be valued for the seed stage, should be valued a maximum of 25 million, for the early stage, maximum of 100 million. For us, this makes sense because this, for example, for early stage investments, if it's valued at 100 million with 10x, it could reach to $1 billion, a unicorn. So if that's doable, we will invest in such a company. Also, there's a criteria on timing. Every company we invest in should have reached at least 25% of their maximum amount goal. And then it should have been started no earlier than 6 months ago. We're trying to focus more on the newer investments in the market. And of course, after all this, when we find those companies, we, of course, talk to the founders again, just to make sure that the founders fit within our own values and visions. And then we create an investment memo. We discuss those investments that we finalize in a partners meeting every 2 weeks now. And then we make that final investment decision.
Awesome, Ahmed. That's really helpful. I am obviously extremely excited about this process. I think what we're doing is we're systemizing and creating a data-driven approach around startup and investing in a way that it's never been done before. And there's so much literature out there that's come out over the past several years that says building larger funds with 75, 100, 125 companies in it will ultimately lead to better returns, especially in these early stages. And by taking this approach and then quantifying everything and removing as many biases as possible by leading with data first, I think that's one of the most powerful ways to build an outperforming fund over the next decade. That's our thesis. We're really excited about it. This is almost 5 years in the making that we've been building out our system, our engine, the brain behind our decision-making, which I think is really, really cool. And I'm so glad to have had an opportunity to share all of these amazing folks with you who I have the privilege of working with on a day-to-day basis, but are really going to be enabling this fund that we're building out here today. So hopefully you'll decide to join us on this journey. You can join us by going to kingscrowd.com/capital to join our fund. And if you want to set up time with Ahmed himself, there's an opportunity to schedule a call with him. And we're looking forward to making some of our first investments here in the next handful of days. So thank you everyone for joining, and have a wonderful day.